Hi, everybody. It's Stephanie Thomas again
And I'm Mary Thomas.
of Thomas, Thomas, and Thomas PC here in Houston, Texas. And we are also known as the Sales Tax Sisters, which I think you already know because you're on the actual Sales Tax Sisters YouTube channel. So today we're going to talk a little bit about local tax. So just pretend that you know whatever service you're providing or whatever you are selling is taxable.
Exactly.
Yeah, and you need to know what tax should you be charging people? And the answer is it depends on what you're doing. If you're selling tangible personal property, then in Texas it's pretty simple. The tax rate you're going to charge 9 times out of 10 is going to be based on the location where you had the sale. So if your sales office is in Houston, then you're going to charge 8.25%, 9 times out of 10, which is state tax of 6.25%, Houston city tax of 1%, and Houston MTA tax of 1%, depending on what it is you're doing.
Texas makes it pretty simple because if you are in a big metropolitan area, then the tax rate is 8.25%. It's 8.25% in Houston. It's 8.25% in Austin. It's 8.25% in Dallas. And thank goodness San Antonio got on the train a couple years ago, and it's an 8.25% there too.
But they're different jurisdictions. Sometimes you have MTAs, sometimes you have special purpose districts, and it all depends on where you are.
And so the thing about it is that in Texas, and this is specifically Texas, the maximum rate is 8.25%.
Exactly.
So if you charge somebody 8.25% tax, you don't have to worry about what their local taxing jurisdiction is wherever they are, because you've already tapped out. What you can charge them is 8.25%.
And it's based on, and if you're, especially if you're selling tangible personal property, it is based on your location. So if you're making a taxable sale anywhere in Texas, you're going to charge them the tax based on your location. That's if you're selling tangible personal property. There are exceptions to the rule as it relates to taxable services. One big exception.
Wait a minute, there's one thing about that thing. What? If you have your place of business in a unincorporated area that does not have that tax rate, that doesn't have the local tax rates in it, like let's say you're in a jurisdiction, you're out in, I don't know, Timbuktu, Texas, whatever, and the tax rate is 6.25%, that's the location of the seller. If you send it out to somebody,
that's if you have nexus. Yes, if you send it out via your little truck or whatever, then you're supposed to charge. You have nexus in those jurisdictions. Nexus is another video, though.
Yeah, I know. But then if you have, but let's say you don't have a little truck, you have a situation where you send it out from your location at 6.25%. And you use UPS or some common carrier to send it to somebody in Houston.
Yes.
Then the tax rate is.
If you don't have nexus, then the tax rate you charge is based on your location. It is up to whoever is purchasing that item to accrue the appropriate use tax in that jurisdiction that is going to.
And in Texas, you don't have any affirmative duty to tell them you may owe use tax on that. In other states, you do.
Yes, but that is a more complex topic that we'll cover later on. But the big thing is, if you're in a jurisdiction where the tax rate where you're taking that sale is 8.25%, you're going to charge 8.25% on every taxable sale made in Texas.
And then you're covered.
That is if you're selling tangible personal property. If you are performing a service, it is a little bit different. Especially, and they have special carve-outs for that. One big carve-out is if you are a contractor. If you're a contractor, the tax rate that you charge your customer when you charge them sales tax, because that's another story in and of itself, but when you charge them sales tax, the tax rate that you use is going to be based on the location of the job. So, for example, if your sales office is in a jurisdiction with an 8.25% tax rate, but the actual job site is in a jurisdiction with a 7.2% tax rate, you're going to charge that customer 7.25% tax. It's based on the location of the job. And the controller's office is really good about having publications about, the local taxes and what taxes due. Like if you are a contractor, or you are doing garbage collection and stuff like that, there's special carve outs for them. So if you're in those types of industries, make sure you try to find out what your responsibilities are.
Most every state I deal with, they have a publication on local tax. You should get it.
Mm-hmm.
Some states don't top out. California does not top out at 84%. And last time I looked at them, they had it's like 14% tax rates depending on where you were.
Yeah.
So, and there are different responsibilities as it relates to collecting local taxes. So you want to look at the publications. If you're not sure about an address, most taxing jurisdictions have a tool on their website that will tell you the correct tax rate based on an address.
And I know Texas does, where you can just you can type in an address, and there's, I think, the sales tax, local tax search locator or something like that. It's on their website. You can put in the address, and it'll let you know the applicable local taxes at that address.
And they even have tables that will tell you historical rates.
Yes.
So it's a matter of, if you're confused about it, you don't quite know what to do. Each state has different rules because, you have home rule states. And when we say home rule states, we're talking about states where Texas is not home rule. California is not home rule. So when you're not home rule, that just basically means that you, as the seller, when you collect the local taxes, you're going to enter all that into your state tax return, including identifying the local jurisdictions that are going to be getting the money. And then the state is going to distribute those collections to whatever localities are supposed to be receiving the funds.
So basically, when you file your sales and use tax return, you file in one return.
Yeah. The home rule state is different. Home rule state means, and there are a couple of them, Colorado, Louisiana. That means that if you are in a place where you have to do your state return. If you're in Calcasieu Parish,
you have to do a Calcasieu Parish return too.
Yeah, you may have to file with the parish. And if you're in a city within Calcasieu Parish, you may have to file a different return.
Yeah.
For that city. So instead of you just filing wrong return and being done with it, you have to file with multiple taxing jurisdictions that have different tax rules. They can have different tax rules. So the state may not tax it, but the parish or the city does.
And you have to be aware of that. That is a possibility.
Yeah. Yeah. And they do audits differently. Just because you're being audited by the state of Louisiana, we've had clients that have been audited by the state of Louisiana, Calcasieu Parish, different Caddo Parish, all at the same time.
Yeah. So just be aware when you're in different jurisdictions that sometimes you have home rule states, sometimes you don't have home rule states. And this is especially true when you are expanding your business out. Mm-hmm. Business expansion is a wonderful thing, but you have to make sure you plan accordingly and understand your sales and use tax responsibilities in those different jurisdictions before you start branching out into them.
Yes, it's the same thing with lines of business. You could be doing something that's not taxable, and you say, "Ooh, I have a bright idea. This is an offshoot of it." The offshoot might very well be taxable. Something I dealt with a gentleman a couple weeks ago said, "Well, I do this. It wasn't taxable in California, but it is taxable in Texas." So he's dealing with a different set of rules. And so that's something for you to think about. And another thing people don't think about is when you have an employee who's really great at their job and they say, well, my spouse got another job in another state and we're going to move to the other state. And you think, oh my gosh, I just can't lose this person. I just can't lose them. You can work remotely from that other state. But guess what? If they're an employee, you just established nexus in that other state, and you have just expanded your tax responsibilities. So it's something to always think about when you're talking about changing your business lines, expanding them. You're talking about changing what states you're in. You're taking on different new responsibilities, and so that's something to think about. And local tax does operate differently in some states than it does in others. I personally, and I'm biased, I personally love the fact that if I am a seller of something taxable and I charge 8.25% in taxes, I'm done.
Yeah.
Versus if I'm in California, depending on and their local tax is a little different than ours. Actually, it's not different. You may not be responsible for collecting the use tax. So if you're in a jurisdiction and your customer is in another jurisdiction that levies district taxes, you may not be responsible for collecting those district use taxes. They may be responsible for reporting them on their return on their own.
Yeah. So I think the great big takeaway is know what your responsibilities are. You have to be proactive because you never wiggle out of a deficiency or anything like that by saying, "Well, I didn't know." They will laugh you out of town, and the standard answer is, "Well, you know now."
The thing about it is that some states do make it easy. They do put out publications. So if you go and you look for, if you go to a website maintained by a taxing authority and you put in local taxes, publications will pull in. I know Texas and California have robust publications as relates to local taxes.
Yeah, but the other thing is about the publication thing, and I don't want to get off on a side tangent, is dealing with all the jurisdictions I have dealt with. Some states are better than others, and sometimes you'll have a publication that's up that might be old. So I always like to have, in addition to a publication, I like to have the tax code.
And it is in the code.
Yeah.
And it is.
I like to have the tax code reference in addition to a publication because I have run across in some jurisdictions where the publication wasn't as up to date as the code. So publications are great. They usually help you understand what the code says, but also get the code too.
And if you think that there might be something going on with your jurisdiction because rules change and states do work on letting people know when things are changing, it might be a good idea for you to get on your taxing jurisdiction's email list. We're on different email lists where they tell you about policy once a month.
Yeah.
You might want to go ahead and do that. Or if you think you want to talk to someone about what you think is going on, as long as you have some knowledge under your belt, you can call the taxing authority. Just make sure that if you're talking to somebody, they are telling you or they're pointing you to a place where it's actually written.
Yes.
And they're not just blowing you off, because sometimes that happens. Sometimes you can it's happened to me. I'll be talking to somebody about a tax issue, and it's a collaborative process. They know a piece of it. I have done some research, so I tell them what I think, and then I'll refer them. I'll say, I'm on your website. This is what I'm looking at. And then the person will go on there and say, oh, yeah, I didn't know this was here. And then you kind of work it through together. They're not infallible either.
No.
But that just makes it more important for you that you do your research and have an idea before you call.
Exactly. So I hope we have not made you completely frightened and run from the room screaming. But I think the big thing is, when you're going into different areas, when you're setting up your business, when you're expanding your lines of business, make sure that you do some planning ahead of time. So you know what is taxable, what is the correct tax treatment, and get the actual support and references to support your position.
But this video is supposed to be about local taxes. So that works with local taxes. It is important that you understand your local tax responsibilities, because some jurisdictions will put the bite on you for, oh, you charge 6.25, you were supposed to charge 8.25. And they will charge you that differential.
Yeah, and then you can try to get it from your customer.
But depending on what you do, good luck.
True that.
So, If this video helped you, please let us know. Thumbs up. Consider subscribing. If you have questions about it, put them down in the comment section. Because like we said in another video, we're going to be responding to these questions.
Yeah, and we like comments. You know, we do. So thanks everybody for watching the video. Have a great day.
And shout out to Julian. Thanks for all your comments, Julian.
Yeah.
We look at them and we appreciate them.
We do. Have a great day, everybody.